Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 15th of March, comes to you from London. And the big news yesterday was US inflation numbers. We saw the CPI number change such that inflation is now running at 6%, down from last month's inflation rate of 6.4%. And increasingly, the market is now saying that the Fed won't be so aggressive on interest rates. One of the things I love to do, and it's just playing a little bit with charts, and I spend my life playing with charts, is I like to overlay a chart on the chart and see what that inflation means. So I've got all these different data sources coming into Updata, so you can overlay different data sources from anywhere, basically. And if I allow this time shift, it's quite a cool little tool. I can then just go and grab the inflation chart back then and put what happened in the 70s on now. And what's really quite interesting was in the mid 70s we saw that inflation falling back and then of course rising to make a higher high. So just because we're seeing inflation falling doesn't mean necessarily that we're not going to turn around and go higher. It's quite interesting just seeing that chart. Now lots of people will tell me all the conditions between the 70s and now are different, but it's just very interesting to see that inflation may have peaked at this 9% level. Last time it was 12% in the 70s, and then fell all the way back to 5%, and people were feeling quite relaxed and confident that inflation was under control, and then it rose to make an even higher high. So here we're seeing inflation numbers that potentially, if it did the same thing, around 11 or 12%. And of course we have got targets in bond yields pointing to 9%. So just interesting. And then if the Fed doesn't raise rates this time to put inflation under control, maybe, just maybe, they're pushing the problem out further for years to come. We'll see. And of course, if we look at the inflation rate in the past, the blue line here, this is interest rates, and quite interestingly, normally it has taken higher rates to get inflation under control. And at the moment, of course, we still are well below the inflation number. So it will be interesting to see whether inflation can actually fall below this interest rate level. That's really what the Fed is going to want to see, is inflation below their base rate. So be very interesting to watch that. And of course, the markets are all over the place since this Silicon Valley Bank debacle, and we're seeing yields collapsing, etc. So let's have a look at the charts. So we'll start by looking at the dollar index. The dollar actually weaker this week. We see that weekly candle there showing through, and we're just pulling back. We are short-term bearish below the cloud. This is my weekly, my daily, and my 60-minute cloud chart. If you're above the cloud, you're bullish. If you're below the cloud, you're bearish. It's really that simple. And at the moment, we're bullish on the long-term trend, pulling back to support. But on the medium-term trend, we're just hitting some resistance, some cloud resistance. And short-term, we're below the cloud. So this move here of the last few days relates to a few candles here, relates to that one weekly candle there. And these are the corresponding point and figure targets, and we do have this downside target back to around the 100 level, back to the floor. The really big thing will be, will we make a lower low below 100, or will we manage to break above this sort of 106 level and make a higher high? That's what we're going to really watch for the dollar for the bigger term picture. Looking at sterling, sitting just above the 121. We did nudge 122, so just falling back a little bit there, hitting some resistance against the dollar. And if we look against the euro, sterling sitting at 113.44, fairly static over the last several months, just deteriorating slightly, long-term weaker against the euro. Bitcoin has been all over the place and is knocking on the door of that $25,000 mark again, so really quite significant there. We did deactivate the upside target here. We will have another one here brewing off this buying thrust, but there's a shortage of clear targets on the 60-minute chart. We've got a lot, and of course if you're trading crypto, you really want to be looking at the 1-minute targets. The Nasdaq sitting just below 12.2, not enough to get it back really above the cloud on the short-term chart, finding some support there on the medium term, but long term, of course, hitting resistance. We've been bearish on the long-term chart for US equities for several months, and we've been going on and on and on about that. Expect expect shocks to the downside, which is what we saw last week with Silicon Valley Bank. The future's not looking good this morning. Markets are going to reevaluate this inflation number and what the Fed's going to do, and we are just seeing the futures down, the Nasdaq future down nearly 0.75%. So expecting markets to open lower in the US. That's filtering through to the UK market. FTSE future down 1.6%. And just starting to break below the cloud there. Couldn't hold that 8,000 level, so that's really quite significant. We do have upside targets, but of course with the situation building in America, it's unlikely that we're going to see that, and those targets pushing without a recovery in US equities. And we're seeing here on the DAX in Germany a real deterioration there, pushing to new lows on the 60-minute chart, and really just starting to really question whether we can hold those higher levels, and the more recent targets starting to come off the long-term chart. So that's really quite significant too. Japan was actually up just over 0.5%. The Hang Seng was up 1.5% in Asia. That's actually improved slightly. And if we look at the Sensex in India, that was down 0.6%. So Asian equities mixed, and the Aussie market was up just under 1%, having fallen over 1.5% the day before. Not looking great, curling back below the cloud there. That 7,500 level for the ASX 200 just proving a level too far. We'll look at the energy mix in a minute. Looking at some of the commodities, we've got wheat up 1%, so quite interesting there. We're seeing gold holding on to that $1,900 level. Really significant. If we can move above, say, 1915, we activate a target to 1995, and of course 2000 will be a psychologically very important level for gold if we can break through that. With all the turmoil we're seeing, a lot of gold bulls are waiting for that to happen. And looking at silver, move higher, sideways. We've got a target higher. We've just got to wait here to see whether we can break higher. Found the floor at 20. Buyers came in at 20. We saw a 6% move in silver when all the turmoil started to hit. Looking at copper, we are just down 1%, but again, looking stronger there on that medium-term chart. And 10-year yields, of course, we talked about that, falling back to 3.5%, knocking on the door of 3.4% at one stage. 2-year yields plummeting 130 basis points, and from a peak to a trough. So really interesting that we're seeing those yields still short-term bearish. Maybe we'll find cloud support. We've got to watch these targets resolve themselves. If we get another thrust upwards, we've still got that 9% target that's hanging there, but we've now got a downside target and an upside target. So the market uncertainty is really showing through in those yield charts. Looking at the energy mix now, we've got Brent crude. That's really deteriorated back into the 70s. And really now just breaking that triangle move. So really was a question of which way we would break. We're now breaking lower. That 75 low in December is now super critical. We need to see if we can hold that. Downside thrust targets. Remember those thrust targets like that are the sell-offs pointing to lower levels. We've got targets into the low 70s, one at 66, which is activated. 75 is a pretty good level. We've got lots of targets to there. And on the short-term chart, we are seeing new targets kicking in. Of course, if you're trading crude, you want to be watching the 1-minute targets. These are those there on that chart. This is my daily, my 60-minute, medium-term, short-term, and then here we've got the even very short-term charts. Emissions, that's fallen through the critical level this morning, so that's really quite key, and so really watching for that at the moment. This is really not looking great. We've got downside targets there. Gas markets lower as well. MBP, TTF down a couple of percent. We were neutral on gas this morning, but we were bearish on emissions. And German power, last of all, look there, the CAL on the EEX, that's actually CAL 24 targets in either direction, but falling away there as well. So a pretty mixed picture. That carbon chart really significant. We're seeing those moves there. Need to hold that 92.50 level. That's going to be really critical. And so that's it for today. Until tomorrow, happy charting. Hang in there and watch those markets and keep an eye on the targets. Bye for now.